morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the energy sector and some of the energy sector constituents. Well, the lone energy sector constituent, that is Trinidad and Tobago NGL or TTNGL, as well as a company very related and close to the energy sector, National Enterprises Limited. Now, both companies would have reported different financial results for their most recently concluded financial periods. Let's take a look at what would have happened and what investors might expect in the coming months ahead. Turning firstly to TTNGL or NGL, well, the group reported an earnings per share figure of 21 cents per share, a 5% improvement from that 20 cents reported in that prior comparable first quarter of 2024. Driving that performance, or improvement in performance rather, was a 4.5% improvement in that share of profit from joint venture. Of course, it's loan investee company, PPGPL or Phoenix Park Gas Processors Limited, improving from $30.8 to $32.2 million. Interest income increased from $0.03 to $0.04 million, a 28% increase, so large in proportionate terms. Overall profit after tax improving that 4.4% from 30.5 million to 31.8 million. So what would have driven that improvement in its investee company, PPGPL? Well, we can see that there has been some stabilization and in fact a modest recovery in terms of natural gas liquids prices, where with the exception of natural gasoline, which should have been relatively stable at around $1.54 per gallon, there was a modest improvement in butane prices, up from $1.03 to $1.06, as well as propane prices increasing from 85 cents to 90 cents with the most recently available data, of course, from the first quarter of 2024 to first quarter of 2025. There was also a modest improvement or stabilization in terms of natural gas liquids production and export at the domestic level, with production with available data for the first quarter of 2024 improving from 1.5 million barrels to 1.53 million barrels, as well as exports improving just modestly from 1.27 million to 1.3 million barrels over the comparable quarters. So that would be the major attribution to improved performance for NGL. Of course, the big question mark for the stock, TTNGL stock, as well as investors, would be the absence of dividends. And with some limitations due to legislation, NGL has not been able to pay a dividend since fiscal 2023, in fact. So we are just about 2.5 years into the absence of a dividend from TTNGL, either interim or final, as we can see in this chart. And that would have led, or has been leading, of course, to a lot of shying away from the stock by investors, with, of course, a fairly significant decline. Of course, NGL would have IPO'd at about $20, traded as high as $30 or thereabouts, and is now down to just about $3.76. From a book value perspective, of course, for the investor with a more patient outlook and who is willing to wait on the resumption of dividend payments, NGL is trading at a relatively attractive book value. Again, at that $3.76 when compared to its book value of $6.82, notwithstanding, of course, the impairment charges, non-cash impairment charges, which would have led to a decline in its book value, trading at a book value of just around 0.6 times after a high of 1.8 times in that first quarter of 2023. So again, at that price of $3.76, NGL is trading without a trailing 12-month PE ratio, again, because of those non-cash charges, and does not offer investors a dividend yield at this particular point in time. However, with modestly increasing energy commodity prices, a higher profit from its underlying asset, PPGPL, and that dividend uncertainty, Bourse is maintaining a market rate outlook on TTNGL for the time being. Turning very quickly to National Enterprises Limited, well, the group would have reported a loss per share of 31 cents per share, which was a wider loss than the 22 cents recorded in that prior comparable period of its six-month fiscal period for 2024. Dividend income was one of the major drivers in terms of this decline, down 57%. So dividend income from investee companies falling from 107.2 million to 45.8 million. Overall operating income declining just about 54% from 111 odd million to just under $51 million, including those non-cash changes brought about by fair value losses to its investee assets, there would have been a total comprehensive loss of 187.5 million, which was a wider loss than the 133.3 million it recorded in the prior comparable period. Now, in terms of the energy price front, which would be and production, which would be driving those returns from investee companies, we can see that it has been pretty much somewhat stable in terms of pricing for natural gas for the period October 23 to 24, as well as October 24 to 25. That's up the available data, and with production volumes modestly increasing over that period. I'd be talking about the domestic economy in total right now. Natural gas liquids improving just a bit as well, from 1.96 to 2.14 million barrels. Ammonia production also improving from 1.19 million tons to 1.41 million tons, with actually a decrease in pricing, and LNG also improving in terms of volumes from 5.7 to 6.37 million tons in terms of production. Whether that translates into increased income from investee companies in subsequent periods remains to be seen. And overall, when we take a look at the energy production landscape or energy price landscape, utilizing the central bank's energy commodity price index, or ECPI, we can see that energy prices have been relatively range-bound since April 2023 to April 2025 over the past 2 years, with that flattening out after a fairly significant spike, and of course recovering sharply from the COVID-afflicted period, with that Russian war as well as supply chain shortages in that 2-year period from 2022 to 2023, or the mid-2023, there has been some stabilization in prices. Like TTNGL, the book value of NEL has come down, and relative to its market price, the price to book ratio is relatively attractive at 0.6 times. Again, for the patient investor who is willing to seek a resumption in dividends, or willing to wait for resumption in dividends, that might be one indicator of potential value for the longer term. So again, at a price of $2.44, NEL is trading at a negative price earnings ratio compared to the sector average of 14.1 times, and has not in the prior 12-month period offered a dividend compared to the sector average of 2.2%. So with that lower investee dividend income in mind, an uncertain near-term energy outlook, though there seems to be some cause for optimism in the medium term, and of course that near-term slight improvement in terms of energy production versus maintaining a market return on NEL for the time being. And that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, enjoy the long weekend, and we'll see you again on the Bourse Report.